Go. We're on. Good evening to you. Hope you are good. Yeah, we're on. Fantastic. So, what I'm going to touch on tonight on the mastermind is. Sounds okay. Is don't get yourself confused. Don't get yourself confused. Don't get you confused. It's so easy when you get into trading to become overwhelmed by the different strategies, etc. You see, the industry is definitely designed to make everything complex. And it's my job to simplify that for you. So I'm going to show you um, a, a really easy strategy to adopt in trading that makes it nice and easy for you. So I'm going to hit the charts in a second, but it's very important that you choose one model and stick to it. It's so easy to, like I talked on yesterday, of joining signal groups, etc., and you're relying on those people to continually give you. I've got some trades kicking in around about now. This was going to be one of my examples, so you might see it play out on screen. But it's so easy to just rely on people in terms of your trading knowledge, etc., and that can last years of just relying on other secondhand information, etc. But if you simplify the complexities, cut through all of that, and look for just a simple approach, a simple blueprint, yeah, it will make it a lot easier for you. So I'm just going to share my screen. I'm just going to share my screen right now. I'm just going to share the charts. Perfect. So you can see that. Do let me know in the comments whether you can see that or not. Let me know if you can hear me loud and clear. So let's get to the charts. And I believe one of my trades is actually kicked in round about now, I think. Let me have a look. Yes, it has. Fantastic. Okay. So the first trade, let me have a look what's going on with this. The first trade, this is so distracting when I've literally come on to do a lesson and one of my trades is kicked in and now I just want to look at the trade I'm in. But hey, let me show you what I was going to give you as an example. So pick let me just get this up nice and easy for us. Perfect. Okay, so we have hit that then. We have hit that. Let's have a look. I'm just going to half my position on this particular trade here. Perfect. Right. So don't want to get distracted, want to deliver the fire. So what I'm going to teach you tonight is how to set up a nice, clean, easy trade setup. So this was going to be my first one. Because what we've got here on this particular level, so all day we have been ranging. This could have kicked in at somewhat past 4. I think it was 20 past 4. This could have kicked in, but it didn't. And what we've been doing all day is just ranging like this. And we came down just around here and slightly front run my particular level. Where is my level? It's this one here. This is the trade I set up earlier. So we were waiting for this to kick in nicely, and it looks like it's come down. But the way that we trade is nice and simple like this. I'm going to see if this level actually holds here. What we've got. So bloody distracting when I want to keep an eye on a particular trade. But this is real life. This is absolutely brilliant. Not expected though, so I prepped everything. Screw it. Let's have a look at this trade. Let me set it up from scratch. So the reason why I was interested in this trade is because we've got some horizontal levels, and this is how simple we make it. So we've got a couple of levels that we're interested in around about now. So we've got a localized time frame. We've got the 2 minute time, the 2-hour trade here, and we're looking at this localized area here. Yeah. So what we've got a couple of trades here. First one is this one. Now, learn how to use Fibonacci levels. They will save you a lot of trouble and they will give you clear direction in the market. I love the Fibonacci levels. What I also love is horizontal support and resistance levels as well. So on this Fibonacci, we can see the normal Fibonacci's are these. standard. These are your Fibonacci's. You've got your 236, your 23.6, your 38.2, your 50, your 61.8, your 66. We've got some custom levels. Your 702, your 75, your 78.6, and the 88.6. These are quite crucial key levels that we use. But what I like to do is just use a couple of them if I only need them. So what we've got here is we've got our first level of confluence. Second level of confluence that I can see here is what's called a daily level. What a daily level is, I've got the daily chart up and I'm looking for a close and an open of a candle going in the opposite direction. And that's exactly what we've got here. So let's bring this up here. Perfect. So we've got that nice daily level there. So straight away, this is nice. Perfect. I'm in profit now, which is good. What we've got, it's always nice to be on profit while you're online. What we've got here, we whip back to the 2-hour chart. Let's go to the 4-hour chart. I've now identified 1, 2, 3, 4 key levels that I'm interested in. So what we do is we draw a box. Bearing in mind, this wasn't here. This was up. This was trading at this particular price point earlier on. And I said to my team, I've got 2 areas I'm interested in. Nice and simple. So all we've done, we've pulled a Fibonacci from this swing low to that swing high locally. We can see what makes a swing. You can see a pivot low and a pivot high. So we can see that pivot high, pivot low, pivot high. And hopefully this will be a pivot low as well. So what we've done is pull the Fibonacci. We've also identified the naked daily level. It's no longer naked. Naked means it's been tapped. It hasn't been tapped is what naked means. And what we can see here, that's exactly what we've got. Just here, we've tapped it and hold support. So straight away, the area that I'm interested in, remember when the price was trading up here, is this level here. From the top of the 7.5 fib all the way to the bottom here. Why? Well, I've just explained I've got 3 levels of confluence here. But what I've also got, I've got some key liquidity here on this swing low. That's what I've got. So we're keeping it simple. Rather than making everything complex, that's going to debilitate you. If you're looking at the charts thinking this is really, really complex, you're never going to want to trade. You're never going to trust yourself. And that's the thing. Find yourself a very easy, streamlined, very simplistic strategy that you can rinse and repeat constantly. You do that and you're going to be very, very profitable. So this is a very, very easy strategy. What we're looking for levels of confluence. Confluence means when levels join together and they're in the same similar area. What we've got these levels up here, and we've also got this support level here. So that's what we're waiting for. Now, we're not just going to go all in at this point here, although obviously that could work. What we're going to do, we're going to DCA in slowly. So we're going to dollar cost average at each level here. That level there, this level here, so another buy in there, and this level here, and another buy in here. That's what we're going to do. And the further down that we get throughout this master zone, as we call it, trading masters, mastermind, master zone, this is the master zone, is the bigger the buy-ins are going to get. So the largest buy-in is here. We have a medium-sized one here and a smaller one there. The reason being, if our entry point is here at first, the more that we buy, it then pulls. Let me bring that down. It then pulls the entry all the way down. So then when it finally does a V reversal like that, starts to work our way up, we're in profit sooner. Nice and simple. So I've got another buy in here. I've got another buy in here. I've obviously already bought in here. I did reduce the position slightly while I was on this session. This trade kicked in just as I logged in. It did put me off at first, but here we are. I'm fine. If this trade would have kicked in 10 minutes before, I could have prepped the session, etc., and got into it. But obviously, that's kicking in and hitting my buy-ins just as I click play, and I'm thinking, right, get your backside in gear. So that's the first one. Now, in terms of taking profit, I'm actually going to do another session on this. So the take profit zone would be here. And you're thinking, well, when do I know, how do I, and when do I know when to take profit? That's for another session. But for now, what we're going to look at is where to buy. So this is the first area. Always have a few areas on your charts that you know that you can rely on, etc. So the next session, the next area, sorry, is going to be further down. So this is the first area. Now, I've got a stop loss close by because I know that if this falls through like this and starts making lower highs and lower lows, I don't want to be in that trade. So my stop loss is here. I don't want to be in this trade if it falls any lower than this. And I'm happy to take a small loss and get out of that bad boy. So the next area for me is using the same principle. I'm going to take the Fibonacci from the low of this move to the swing high, not this swing high, this swing high. So I've taken it from here. I've taken it from here, just here. And this is now giving me the same levels as here, 7.5 and the 7.86, these two levels here. What I've also got, if I remember right, is I've got some other levels as well. Yes, I have. I've got a daily level. I've got two of these on Bitcoin. So we've got two areas that we can be interested in. Another daily on here. What we've also got, I know, is we've got, I'm going to check anyway, but we've got some volume levels, also known as naked points of control. So that's what we're going to look at here. Okay, well, that's good. That is good. So that trade above is actually better than I thought, actually, because we've actually got a naked point of control here and a naked point of control here. So yes, if we do fall below all of this, that's good because you've got that liquidity. This is in fact a very, very good area here. It actually needs to come lower because you've got so many levels of confluence. You've got these two, these three, 7.5, 7.86 daily, previous liquidity down here, and the naked point of control here in the middle, and the naked point of control at the bottom, along with this liquidity sweep here. So we've got amazing levels here. 1, 2, 3, 4, 5, 6. 6 levels of confluence in this localized area here. So I'm liking that. I'm liking that. Nothing else down here. I'm still interested, though. I'm still interested of this particular area here. Definitely still interested for a final bounce. What I also like about this area as well, we've got 1, 2, 3, 4 levels of confluence. The other level of confluence is here. Vector candle recovery on the 4-hour. Vector candle recovery, which is a banker candle, and 3 levels here. So if we do fall and we make a small loss on this stop loss, all we do is we wait patiently for this level using exactly the same levels and exactly the same principle. It's coincidence that these levels are the same, these ones and these ones, just pulled from different areas. It's just coincidence. But for me, this is still a fantastic area here. So I would expect a bounce here. Now, of course, if we break through this and we break through that, I think we're coming to make new lows below 60K. But that's another story for another session. This is talking about localized, simple trades. So all we need to be worried about, thinking about, focused on are these two areas here. That's why my trading day, so listen to this, my trading day is just a couple of hours a day. I do not trade in the morning. There's no point because the London session does not really move the market. The only session that actually basically moves the market is the US stock market that opens in England, in the UK, at around about 2:30. They're 6 hours behind, so that's when they start the day. So fantastic. So what I do is I have the whole day off, do stuff with my family, do stuff on the business, etc. Just do whatever I want to do until about 2:30. So my working day is 2:30 till 7. Why? 2:30 till about 5 p.m. I'm trading. If we get any trades that kick in around 6 o'clock, I'm trading. But for me, I'm obviously hopping onto these sessions as well, which is part of my whole business, trading and training, education for the community and you guys that are watching, that are new to the channel. Don't forget to subscribe and like and comment, by the way. I'm in this for the long run. So after this, when I finish and wrap this session up, 7 p.m., I'm done for the day. And that's to kind of encourage you that we're not at the charts every single minute of every single day. There's no point. What we do, we get here in the morning, we set these levels up. These levels were set up this morning, but I thought I'd demonstrate you them live. It's pointless me getting a trade up and going, ta-da, here's one I made earlier. You're not going to learn anything from that. So I've set them up for you. So I set these up, set this one up this morning, and I set this one up this morning. And it's pretty much took 8 hours to kick in. But now I'm at the charts because this is my time of work, because I know that this is when the most volatility is in the market. It's easy for me to just come to the charts. Volatility is a good thing. People say that I don't like being in crypto. I don't like trading in general because it's too volatile. How can you have it too volatile? We make money from price movement. We want the volatility. We want the violent move. I don't want the level to come like that. I don't want it to dribble down like this, because if it dribbles down to my level, no doubt you're going to get a follow through and it's poor. You're going to get a poor reaction and then probably it's going to go straight through. I want a violent move to my levels. Bosh, bosh. More violent and aggressive the move is, the better the reaction. Why? Because the smart money is buying with an aggressive. The smart money is bringing the market down rapidly. The smart money is buying. When they bring the price down aggressively like that, everybody else is scared, so they don't buy. The smart money buys. That's what we want. If this is dumb money, if we're coming down to there's no institutions or smart money that are bringing the price down to a level like that. That's why you get a dribble, because it's retail trying to get a reaction on this. It's not retail that are going to. We're retail, by the way. It's not retail that are going to get the reaction here and push the price back up. It's institutions. Bosh, bosh. We're looking at a number of things when we're entering this. We're not going to go into it now, but we're looking at order flow. We're looking at volume. We're looking at how many buyers are actually interested in buying at this particular point here. That's what we're interested in. So we need the price to move down aggressively. We welcome that. And we want the price to move back up aggressively. That's what's not really happened here at the moment. As we know, we've got talks in the US of potentially, some war happening with Iran. There's talks, there's announcements, etc. There's a lot of stuff going on at the moment. So it makes the market very, very nervous. So that's why you've had a bit of a sluggish reaction here. I'd be monitoring this if I wasn't on this session. I've got a low position at the moment. My higher positions are lower anyway, so I'm fine. Actually in two positions, another altcoin called ICP. But yeah, I'd be monitoring this on the lower term time frame, and I'd be look. I want to see the reaction. Quite simply, at the moment, this hasn't had a very, very good reaction. Of course, it could have a reaction in the future, the near future, hopefully. But at the moment, the alpha is saying that the money flow is still leaving the assets, so might not be the best. Might not be the best call at the moment. But the point of this session is me explaining what types of trades that we get in, what types of trades we're looking for, etc. But find a very simplistic model like this. This is what we teach, like this, so that you can execute these trades and understand what you're doing, while ever you are relying on other people to give you trade signals, for you to just guess in the market, for you to just be trend. I'm not saying that this is useless. I think this method is I think it's helpful if you use it in confluence. But if you're just using trend lines like this, that wouldn't have worked out very well for you. Look, you've got a low, a higher low, a higher low, and it's fallen straight through. So that wasn't very helpful. More a trend line is tested. It's like a ball that's dropped. You go bosh, 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 bosh like that. And then finally it falls through. And you can see that come down, created the low, nice rebound. And you can see it gets lower and lower and lower before falling through. That's how most people trade. What I like to do is use the horizontal levels as good, solid confirmations of support. And 9 times out of 10, if they're plotted correctly with the right context, they'll provide well for you. So yeah, find yourself a very, very clear and concise model like this, and trade it. My stop loss for this one would definitely be just below that low there, this vector candle, and there. So nice tight stop losses on this. So if we do go wrong and it does invalidate, just picture a stop loss as an invalidation point. This trade is no longer valid if it hits your stop loss. And if it's no longer valid, you don't want to be in it. So that's why they're nice and close, because we know that any low below this is useless and any low below that is useless. And I'd be looking for lower below here. And if it comes down that much, I would suspect we're coming down for some lower levels that we've got marked out anyway on the charts. So that's all from me. I'll be giving updates in my community tonight, giving them updates on what's going on with the trade. This trade's kicked in. This is one of my trades. I'll be giving commentary on it, what I think is going to happen, etc. I'll just have a quick look at these trades now. Let's have a look. Are we in profit? Yes, you beauty, we are. That's good. That's very, very good. We're in the green, which makes me happy on both trades. So that's good. So yes, if you're interested in getting trained up, if you're interested in having a couple of coaches and a mentor to help you and handhold you, and you wanting to journey each day with a load of like-minded people, like the community, some of the guys are watching now, then of course you can either DM me if you want to, or if you click the link in my bio or in the description of the YouTube as well, you'll see that we've got some packages available that you can purchase on the workshop as well, and that will automatically upgrade you to our community. Why is community important? Of course, it's important because embarking on something like this right here is rocket science if you've not got nice, measured, structured steps to keep you on the straight and narrow. It is. If you don't have that, you're just peeing in the wind. You're licking your finger every day and you're going, right, which way is the price going to go? How do you know which way is the price going to go? We make sure that we're aware that we've got trade setups ready at the bottom for longing and at the top for shorting. And we trade in the range until it breaks. So it's nice and easy for us. So yeah, happy days. Hope you enjoyed the session. 22 minutes. Speak to you soon. Have a good night.